Welcome to today's stock analysis, where we'll be examining two automotive giants, Tesla and Toyota Motors. Despite their differences, both companies hold significant intrigue in the automotive sector. Are they currently trading at fair values? Share your thoughts with us in the comments below. And now, join us as we delve into the intricacies of intrinsic stock analysis and unveil what these insights reveal about today's stocks. Now, we've seamlessly integrated the ticker symbols for Tesla and Toyota Motors into our spreadsheet, automatically importing the relevant stock data. Examining the 365-day graph, we observe a fluctuating, but flat trajectory for Tesla over the past year, while Toyota has presented an almost constant upward trend. Tesla has lost approximately 9%, but looking at just the last 3 months, the company has lost close to 31% of its value. Toyota Motors has, on the other hand, gained an impressive 75% in the last year. Shifting our focus to valuations in comparison to target prices, Tesla appears to be approximately 25% under the mean analyst target price, while Toyota Motors is trading in line with the analyst target price. Now, let's delve into a more detailed analysis of the intrinsic values for these two stocks, utilizing the 5 distinct intrinsic valuation models embedded in this spreadsheet. This exploration will provide a comprehensive understanding of Tesla and Toyota Motors' intrinsic valuations. Our initial stop in the realm of intrinsic valuation brings us to Graham's revised valuation model, a creation of the legendary Benjamin Graham. This model enables us to determine intrinsic value based on 3 key inputs: earnings per share, the anticipated growth of the company, and the current yield of a AAA bond. Fortunately, our automated spreadsheet streamlines the process, requiring only the addition of the company's projected growth, readily available on platforms like Yahoo Finance. Both Tesla and Toyota Motors have estimated growth projections for the next 5 years close to 10% per year. Upon incorporating the projected growth for Tesla into this model, the intrinsic value calculation yields close to $67. This indicates that Tesla's intrinsic value is approximately 58% below its current stock price. Applying the same methodology to Toyota Motors, the intrinsic value computation results as $376, revealing a substantial difference of 60% relative to the current stock price. Tesla thereby seems to be overvalued compared to its intrinsic values, while Toyota Motors could be trading at a discount. Moving on to the next valuation model, we explore the Peter Lynch dividend adjusted fair value model. In this method, the Peter Lynch fair value is determined by adding the earnings growth rate and the dividend yield, and then dividing the result by the price to earnings ratio. The output is a value either above or below 1, where a value below 1 suggests an overvalued stock, while a value above 1 implies an undervalued stock. Upon applying this model to Tesla and Toyota Motors, we get two very different results. Tesla Motors have a Peter Lynch fair value close to 0.27, indicating that it is trading at a stock price over its intrinsic value. On the other hand, we get a Peter Lynch fair value of 1.31 for Toyota Motors, indicating potential undervaluation. To refine this assessment, we perform additional calculations, although I won't delve into the specifics in this video, to derive a more tangible fair stock price. For Tesla, this computation yields a fair stock price close to $44, approximately 70% under its current stock price. On the other hand, Toyota Motors' fair stock price is calculated at $308, 30% above its current stock price, again indicating that the stock is trading at a discount. Now, let's delve into the comparable company analysis, also known as the multiples valuation model. This approach involves identifying companies similar to the one under scrutiny and utilizing their price-to-earnings ratios to calculate intrinsic value by multiplying with the company's earnings per share. In our analysis, I've included comparable companies for both Tesla and Toyota Motors. Focusing on Tesla, the intrinsic value derived from this model stands close to $80, a 51% under the current stock price. Shifting our attention to Toyota Motors, the calculated intrinsic value is $320, a substantial 36% over its current stock price. This comparison unveils interesting dynamics, suggesting that Tesla is currently trading at a valuation far above its industry peers, while Toyota Motors is trading at value under its industry peers. Normally we would explore the dividend discount model, a method that delves into a company's dividend payouts over recent years. However, Tesla does not pay out dividends, and Toyota has not paid dividends to its shareholders since 2016. Therefore, this model can't be used on these two stocks, and we will therefore move directly to our last intrinsic valuation model, called the discounted cash flow model. This model values a stock by estimating its future free cash flows, discounting them to present value using a chosen discount rate. It then factors in cash and cash equivalents, subtract total debt, and divides the result by shares outstanding to determine the intrinsic stock value per share. For Tesla, we can source the necessary data from Yahoo Finance, including cash and cash equivalents, total debt, shares outstanding, and free cash flow data available online. When we integrate this data into the model and choose a discount rate of 7.5, the intrinsic value calculated stands at $67. 59% under the current stock price. Applying the same methodology to Toyota Motors, the model yields an intrinsic value of $177, which is 24% below the current stock price. These diverse intrinsic valuation models provide us with a comprehensive perspective on the intrinsic values of Tesla and Toyota Motors, offering valuable insights for investors seeking a deeper understanding of these stocks in the market. In the summary section, we've assessed and compiled all calculated intrinsic values for Tesla and Toyota Motors, making strategic decisions on which valuation models to include in the final calculation. For Tesla, the intrinsic values do not vary a lot and there is not a specific outlier. Therefore, we include all 4 applicable models in the final calculation to reach a representative average intrinsic value. Doing so, the mean intrinsic value for Tesla stands at $64.63, which is 60% below the current stock price. Acknowledging the inherent uncertainties, a margin of safety of 25% is incorporated, leading to an acceptable stock price of only $48.47. In the case of Toyota Motors, we can see that 3 of the 4 applicable models are fairly close in their intrinsic valuation, while the discounted cash flow model gives a result that is almost half of the 3 others. Using all 4 models, we get an average intrinsic value of $295.50, close to 26% over the current stock price. By applying a margin of safety of 25%, the final acceptable buying price hovers at only $221.62, close to the current valuation. In conclusion, Tesla's average intrinsic value, including a margin of safety, is far below its current stock price. While Toyota is currently trading at a stock price close to its intrinsic valuation, if the margin of safety is taken into account. Based upon this data, none of the stocks are trading at a favorable price. However, if we should choose one, then Toyota Motors emerges as the more favorable option of the 2 stocks and could be a keeper for the long run, while Tesla is currently trading at a premium. If you found value in this video, don't forget to hit the like button and subscribe. It truly goes a long way in supporting our small channel. Got a specific stock in mind for analysis? Share it in the comments below. And if you want to harness these valuation models yourself, check out the intrinsic valuation tool featured in this analysis, available exclusively on our Patreon page. There, you'll also find a comprehensive valuation list for all stocks analyzed on this channel. For your convenience, the link to the page is in the video description below. Happy investing! Now, a crucial disclaimer: I am not a professional financial advisor. The stock analysis presented on this YouTube channel is intended for informational purposes only and should not be construed as financial advice or a recommendation to buy or sell any stocks.